Hi, I am Akshatha Udupa. Welcome back to my YouTube channel. As we all know, GST rates have been revised. Previously, we had 5%, 12%, 18% and 28% GST rates, but from 22nd of September, we will have the revised GST rates wherein we will have just two rates, that is 5% and 18%. So, instead of having multiple rates, now we have only two main rates, that is 5% and 18%. Additionally, we also have 40% rate which will be applicable on sin goods and luxury items. So effectively, most of the products that we use, most of the things we come across will fall under just these two GST rates, that is 5% and 18%. Now, on the day this was announced, we didn't see much impact on the stock market. The stock market did not show any positive response for this. But does this have a long-term impact? Does this affect any particular sector, or how will the market might respond going forward? And let us also analyze how will this impact various sectors so that we can concentrate on those particular sectors which will have more positive impact, so that if we are holding the stock in these sectors, it might be in our favor. Before that, why is this change, or how is the government benefited out of this? If we clearly say government does not have any short-term benefit out of this, in return they will have to lose the revenue that comes from the GST, because now the rates are reduced drastically. But government says it looks at this from a long-term perspective, that is, when the GST rates come down, more and more business activity takes place, more and more people engage in the production of or starting up of different units, and this might economically help India grow. With this view, to encourage more and more production, to encourage more and more business activity, the GST rates have been reduced. Now, this might also impact the inflation rate. The inflation might come down because of lower GST rates. Now, let us check the impact of GST rate change on different sectors. First, let us discuss those sectors which will have positive impact of this GST rate change. To begin with, cement, infrastructure, real estate and housing. So, on these industries, the impact is positive because the GST rates have been cut from 28% to 18%. With this, the project cost will be reduced, the cost of production will be reduced. This will boost more and more companies to get into this sector. Next, if we check the two-wheelers, then the bikes with less than 350cc are taxed at 18% now. Previously, 28% GST was levied on the bikes less than 350cc, but now it is reduced to 18%, which will increase the affordability, which will increase the production and sale in the two-wheeler industry. Next, if we check the small cars, then cars with less than 1200cc, and when it comes to petrol, 1500cc and less than 4000 mm is now taxed at 18% instead of 28%. Again, the purchase of small cars will increase, in turn increasing the production in this industry. Now coming to the daily products that we use. If we check the dairy and packaged goods, then with respect to milk and paneer that we locally purchase, now the GST rates are put at 0%. Even before this, the GST rates were 0% for the locally available milk and paneer. So now there is no change in this. But on the condensed milk, butter, cheese, that is the preserved ones, previously 12% was charged, and now the GST rate is cut down to 5%, making it available for more people. Similarly, if we check the consumer goods like ACs and dishwashers, the GST rates is now reduced from 28% to 18%, whereas on TVs of all the sizes, the GST rate is 18%. Previously, depending upon the size of the TV, the GST rates were charged, but now on all the TVs, though you purchase big screen or small screen, the rate is same, that is 18%, boosting more and more production of industry in this sector. If we check the agricultural products, then GST on sprinklers, drip system, harvest is now reduced from 12% to 5%, promoting more and more of agricultural activity. Now coming to spectacles and goggles, corrective eyewear is taxed at 5% and all the other remains the same, that is at 18%, which means only those which are actually corrective eyewear product, that is powered glasses, will now come under 5% category, and the other glasses which we wear for showcasing, all those, that is the glasses without power, are taxed at same 18%. Now as I said, from 22nd September 40% GST rate will also be applicable on sin goods and on luxury items. Now let us check which industry or which sector will be negatively impacted due to this. To begin with, premium bikes and luxury vehicles. Now motor vehicles greater than 350cc and the large cars are taxed at 40% without any cess. 40% GST will be charged, but there is no cess. Similarly, carbonated and caffeinated beverages will now fall under 40%. That is, if you go for the energy drinks, which is now popular, so these drinks will be charged at 40% GST rate. So whatever carbonated and caffeinated beverages you purchase, the GST rate will be the highest, that is the 40%. Similarly, casinos, betting and online gaming, which is now becoming addiction, is also charged at 40% GST rates. And the sin goods, that is tobacco items, all this will remain at 28% plus cess until the loan is cleared, and after that 40%. Government is yet to announce this. Until they announce, it will be charged at the same 28%, and once the announcement is done, then after that it will be charged at 40% GST rate. So these were the sectors which have negative impact. Now there are also some sectors which have no impact. Let us see which are they. First being insurance industry. Here if you see, the premium is exempt, okay, that is 0% GST is charged, but they are not supposed to take any input tax credit. That means till now if they collect the GST, they were also taking the input tax credit and their set off is done. From now on they are not supposed to collect GST from the premium that they collect from the customers. Similarly, they are not allowed to take the input tax credit as well. So if you pay rent and if GST is charged on that rent, then that amount cannot be taken as input tax credit. Similarly, beauty and wellness services, again GST is cut to 5%, but again they don't have the facility of taking the input tax credit. For hotel accommodations, room worth rupees 1001 per day to 7500 per day will be taxed at 5%, again no input tax credit. And if you go to pharmaceuticals, then drugs will stay at 5% with input tax credit, but previously also it was same, so there is no change in the pharmaceutical industry, so there is no impact to this industry as well. So if we clearly check, there are many industries which are positively impacted, some are negatively impacted, and some of them have no impact. So when we look for investing, it is always better to check with those industries which have positive impact of this GST. Though we did not see a sudden hike or sudden response from the stock market, slowly we might see some good response from these positively impacted sectors in the stock market. So if you are thinking of doing any investments, then it is better to check these industries which will be positively impacted in the long run. If you like this video, please give it a like and also subscribe to my YouTube channel, and don't forget to press the bell icon to get notifications of all the videos that I post. I will be back with another informative content very soon. Till then, take care. Bye bye.